Hi guys, Harry Yotis here, professional trader for 20 years. Started my career way back in 2005 and still alive in this crazy week in 2026. The week in question is March the 13th. What was the first day of the week? Nope, it was the 16th. Okay, this was Monday. Down the whole week. Today we are Thursday, March the 19th. One more day till option expiry. And of course, the big news is still oil and OPEX 4.0 because this is Thursday. Okay, so let's begin with our technical analysis and we'll get to the main event later. Technical analysis, we're still chopping in this zone. Yes, shorter term, we are, for the past month or so, we are down. Okay, this very short term downward move. But this is coming at a huge spend, a huge cost. Okay, in terms of sentiment and fear and everything. Okay, we're basically 5% down from the highs. Okay, and we are at extremely fearful and bearish sentiment. Okay, we'll get to that soon. But the technical picture is still choppy, still neutral because we're in this big chop zone. We're gonna get, if it breaks decisively the 652 on the SPY, then we're gonna get a little bit bearish on the technicals. Okay, but so far still choppy around here, even though it's tending to go down. A lot of people are buying puts. Okay, so let's get to the sentiment. We look at the fear and greed index, extreme fear. We're really close to finding some kind of bottom here. Extreme fear everywhere. Okay, almost everything is at extreme fear. And we also had my favorite indicator on Thursday comes out, the AAII Investor Sentiment Survey, and look at the bears, 52% bearish, 30% bullish. Okay, this is huge. 2 weeks in a row above 45% in the bear camp. Okay. I don't know how much longer this can last. I mean, everybody is very, very fearful, okay? And we gapped down open and recovered, okay? I tried to get long on the gap down on the SPY via a longer dated short put spread, okay? Didn't get it. Came close, like 10 cents away. Didn't get it. And also, still waiting. We can still go lower, okay? Because the sentiment is still, it's extreme, but doesn't mean it can't get more so. And if it does, it'll be perfect to hit the 652. Let's bring in the moving averages. We are at the 200, it did hit the 200, but I really wanted it to get to 652. Really here, I'm getting a little bit greedy before going long, okay? Longer dated, May, June type of length in the option structure, but right at the 200, right below it. Okay, so yes, it could have been good to buy here, but I didn't get filled. I'm trying to get greedy. I want to get as much as I can and take advantage of this negative sentiment. Okay, so extremely bearish. Okay, this is enough to solidify. The bears were always there, and now they're out in full force. It's because of oil. Okay, so we did get one macro print today. Initial claims. And look at it. Down to 205,000. Previously was 213. This is very, very low. Okay, despite the unemployment numbers that were coming in negative that last month, nobody's filing for unemployment yet. Okay, so we're not off the edge. The economy is doing fairly well. Okay, the economy is doing fairly well. This recent move is all Trump's war with Iran. That's it. Okay, once it's alleviated, it's going to really, really rebound, in my opinion. Okay, so let's get to the main event, oil. What's up with oil? Okay, consolidating here at the highs. Okay, this is U.S. oil, West Texas Intermediate. It's what underlines the USO contract here, if you want the ETF. Okay, so this is USO if you want to trade it. It's approaching the 129 level, which is very, very big. Okay, and is doing so with huge volume and, fear and everything. Okay, so I did try to go short, longer dated options. Okay, I tried to short a call spread. Okay, I didn't get it. I'm trying to get very, very greedy. Very greedy. Okay, I want to get a really good price. Okay, and by longer dated, I mean I tried to sell the January contract. Okay, I think that once this war is over, this oil move gets smoked. I'm just trying to maybe front run it, but with a good price. I'm not going to enter that call spread with a typical 1 to 5 ratio. No, I want to get a good price. So I didn't get it. Okay. But we keep having news in the oil sector whereby here, Iran oil exports soar as Besant floats unsanctioning Iranian oil. Imagine, Iranian oil already out at sea. There's like, in the coming days, we may unsanction Iran's oil that's on the water. That's 140 million barrels. Imagine being at war with your enemy and letting him sell oil. This is a crazy, crazy move. And they also threw out a trial balloon yesterday that they're going to, unsanction Russian oil, and they're at war in Ukraine. So this is just a fly by the seat of your pants type of administration when it comes to this war. And these barrels come online, the price of oil is going to really go down, okay, even during the war. So especially I like shorting the WTI because this is the Western oil. We are awash in oil in the West, as we always were. Okay, apart from the Strait of Hormuz, like the productivity and the supply of oil is plentiful in the West, plentiful. Just that it's a global market, so it'll reflect on other prices. But still, this is still pretty low. $94 a barrel for US WTI. If this was the 70s, this would be at $200. Okay, but we are not in the 70s. It's a completely different time. Okay, so today there was some news that we got the news in oil, and Trump is not going to sanction exports of oil from the U.S. to to the rest of the world. So it was bid for a while, and then boom, come back down. I think you're getting this news coming out that should be spiking oil, and it's not. It's it's getting tired. It's getting the legs. It's getting tired legs before going down. We bring in the moving averages. It touched the 10 again. It touched the 10 moving average here in green. Didn't close below it. A close below it might get the short-term traders to sell their longs. Okay, even a close below this 20 would be significant. This 20 moving average is far below. It's trading far above the 20. Okay, which is down to $81 a barrel, whereas the 10 is at 92. So we're very close to closing below the 10. Okay, so you keep having this. What you want to see as traders is first you look at the positioning. Everybody's super long and fearful of a war. And you want to look at how the news affects the market. If you keep getting bad news and the price of oil isn't moving, you're close to the end of this move. Okay, somebody knows something, it's going to go down. Who knows? But if the price isn't moving when continuous bad news comes out for next day, tomorrow, then next week, whatever. If you're long, I would take profits. Okay, so yes, I am looking to go short this contract. Not U.S. oil, but USO. Okay, didn't get my price. So close as it was going up, but then it came back down, and the price went out. Okay, it wasn't so close. It was close enough to maybe get hit on a spike higher. Okay, to 129, I probably would have gotten filled. Okay, on USO, if we got a spike to 129 and above, I would have gotten filled, and I would be happy with that. Okay, because I don't think the price of oil in a year or 1.5 years is going to be at, especially WTI, it's not going to be at, 100 or 95, much lower. Okay, so those are my thoughts. Okay, so the next big news of the day was gold smash. Okay, look, yesterday, remember gold? We're bringing the moving averages. We closed below the 50, and I said the upward move is done. So now we don't know where it's going to go. We're in some kind of consolidation. We're in neutral mode. Well, today they smashed it 3%. It was down 5%. Okay, around 5-6% drop, but then it quickly recovered. Okay, because it hit this 4,500 level, which is huge support going back to December of 2025. And here, this next level here at 4,400 is this support from October 2025. So you have two huge support levels. 4,500 and 4,400 are big. Okay, this is where we're looking to buy. And when it did go there, I bought some juniors that are trading at. Some of the juniors are trading at prices right now. Some of them, not all, where it was here when it was around 3,500. So oil, excuse me, I'm talking about oil so much I forgot. Gold is at 4,600, and they're trading about the same price as they were with a breakout at 3,500. So it's stupid. It's really, really crazy. This trade was getting crowded. A lot of people were in it, and this will probably, I like this because it's getting a lot of people out of the space and a lot of people hating the space, and I think it bodes well for the longer term. So, but however, since we are below the 50 and chopping and whatever, this could be very, very choppy for months. Unless this war ends, then we go higher, much, much higher. And also a lot of this sell-off happened, if you look in the intraday charts. Let's go to the 15 minutes. Gold trades 24/7. Let's get rid of the moving averages so you can see better. See, this move happened, late last night, 8:30, 7 o'clock in the morning. Here, it started accelerating at 11. Got even worse at 2 a.m. Okay, this is like 8:30 is the Asian Open right here. This is the Asian Open, 8:30 at night, 8:30. That's the Asian market, and here at 2 o'clock is the European market. Okay, so as the European markets, boom, really tanked. Okay, I guess the Europeans, they need to raise money. So this is what tells me that this smash was a liquidity event. Okay, let's go back to the day. It just goes to show you that people needed to raise money for oil or whatever. I don't know what the crisis was, but this is very, very fearful liquidity event. Reminds me of these 2 days here. Okay, and look, you get a big wick. This is good. Now, if you want to go technical, this could be a double bottom. We don't know. Or continue to chop around these levels between the 4,400 and 5,000. That would be beautiful for months. Get people out. Okay, because now it's not. I'm pretty sure a lot of people got out. Okay, I don't know if all of them got out, but a lot of people got out. I'm still holding for the long term. I've been long since the breakout of 2000 right here. Yeah. So, this is beautiful. It's still an uptrend, still looking good. But short term, short term, it's going to be iffy, sideways, which is what you want. Okay, you want fear, you want everything. There was more fear in gold in the past 2 days than there was in the market, believe it or not. So it's crazy, but that's the way it is. Okay, so that's it, guys. If you like what you heard, like and subscribe, and of course, leave a comment below. And I'll get to it as soon as I can. Let's reiterate quickly. The SPY is still fearful. Okay, we're still in a choppy sideways formation, getting close to buying, getting close to this. I think we're getting close to this down leg ending and us going forward maybe in a week, tomorrow, who knows. Okay, but we don't know when because we are at extreme fear, but this is not a timing indicator. It could last for weeks. It could last a week, maybe 2, who knows. Okay, and we get confirmation from this longer term AAII investor sentiment survey that yes, there's a lot of bears in it. Okay, we had initial claims. Nothing to worry about. That's positive. And of course, oil looking to short. I'm starting to see good news for a bull, which is bad news for the war, not really affecting the price as much as it did in the past. We're getting close to closing below the 10. We don't, or it could be a high tide flag. We don't know. So we just don't know at this point. It's just that I'm starting to see some type of tiredness, some kind of fatigue in the oil sector in the past couple of days. Okay, we don't know. Again, could be high tide flag before another move higher. Nobody knows. But so far, because we're above the 10, still bullish. Just waiting for signs for fatigue. Positioning is very long, and that's it. That's it, guys. Let's see tomorrow. OpEx. Okay, OpEx. Let's see what there's going to be tremendous volume. We'll see. Maybe it gets pinned at the same level. Who knows? But I still think we get a bounce, a big one coming up. Okay, we could go up to 680 to 685. I still think we get there. Okay, so that's what I'm looking forward to. Later, guys.